So this movement today is really a good example of how I trade US30. So something I want to point out is when you have a clean candle ranges that you're trying to trade, you should not be trying to get the entirety of the move because that will eventually lead you to do some stupid things. Your goal as a trader is to get a piece of the move, right? Get a piece of the move, close your screen, and go home, right? Pack it up. So your goal is not to try to, we want to trail our stops. We want to we want our winners to be much bigger than our losers and keep our winners as big as we can, but you don't want to be sitting there saying, oh well, it didn't go all the way to the to the top of the zone or the bottom of the zone, I gotta wait. You got to get your piece of the pie and then get out, right? So this is a really great example. So this is this morning, and the way that I trade US30 as compared to gold or pound yen, for example, is it's all the same concepts, it's all the same stuff, but the difference is I'm trying to time my trades pretty much right at the market open. So a perfect example is this isn't an entirely perfect example, but if you can wait for if you can get good structure that you can trade and enter on at around the time of the market open, that's a really good combination, right? So this right here was, I believe, an hour before the market open this morning, the U.S. Open, and this is a 30-minute chart, by the way. So in the night, what do we have? We have this push up, right? And again, this is going into a clean candle range, but it rejects and retraces, likely because it is not in a high volume time where there is, high volume session in the market, right? So we roll over to the downside and we make a nice little consolidation here, right? And so this is our resistance. So this was, I think it was the 6 or the 6:30 a.m. candle. So what do we get? We get a nice close above the resistance, right? And we see this to the left, right? So we're getting closer. We're about less than an hour from the market open. Um, and so we know that there's going to be a lot of momentum going into the market. So the difference between trading gold and pound yen versus US30 is really the times, because obviously at the US Open gold can have a big move, right? But if you have to get a much more if you had to pick something that was going to be much more consistent to always have a big high volume move on a regular basis, it would definitely be US30, right? So we get the break, we get the close above the resistance, right? And we look left, what do we see? Right? We see this nice clean candle move. So this can be our first level of resistance. If it wasn't a as high volume of a time, like if we were looking at gold and it was 9 or 10 a.m., you could maybe mark this level up here, right? You probably have it right here as your first take profit, but we know, especially with this close, there's confirmation that there's going to be a lot of bullish momentum and a lot of bullish volume in the markets, right? So again, this would be our at the close of this candle above the resistance. We'd have our stop loss below here, entry at the close, take profit up here, or you could, and this candle didn't really make a bottom wick, partially because it's such a high volume candle, right? If a bullish candle has no bottom wick, that means it's just a high volume candle. So you could also go long with a buy stop above this wick here, which is another good opportunity. And then we continue the move up a lot. You could, and again, trail your stops. So um, you know, just because I said, oh, you don't want to, you're not trying to get the entirety of the move because it'll make you, make stupid decisions, doesn't mean you don't want to trail your stops, right? You can still trail your stops because we had a nice big move after this, but this really shows you the simplicity, of the structure. So yeah, and again, um, the main differences between trading how I trade US30 is it's really just anticipating anticipating a really fast, really quick move. So if this was gold, I wouldn't expect this move. I wouldn't expect this candle to be this big. I would expect this to be like, two candles or three candles even. With US30, it's really like, when the market opens, and again, you plot out your zone. So what I do is I get up, an hour and a half before the market opens, and I plot out my zones on the chart, right? And if the price action is crap, then I'll pretty much just I'll be like, okay, I'm gonna go just watch gold and pound yen, because pound yen usually has nice, pretty consistent moves, right? But if there's really good structure, like this was great structure right here. So this is what, 2 hours before I woke up, and when I see this candle close again about an hour before the market open, I'm like, okay, well this is going to coincide with pre market open volume, right? And that's really what we get. And so, um, again, it's more so like there's been a lot of times, and it happens pretty regularly with me, where it's pretty annoying. You will, if you don't act very quickly with US30, you can miss a trade within a matter of seconds. And it'll be like, this candle would open, break the high, sit here for a bit, and you'd think about, should I take this or what should I do? And then you look away for 2 seconds, you come back, and it's pretty much moving all the way up, right? So that's the thing with US30 is you could get 100 pip move on a regular basis, whereas trading gold and pound yen, yeah, you can trade more lots, but you're not going to get as big of moves consistently like you would on US30, right?